Hello, everybody. This is Thomas. Hey, wait a video now. I will show how I trade my 80, my 8, 20, and 200 moving average strategy. Right now, I'm gonna put in a trade on the ES futures. All right. So what? Right now, I'm just gonna buy market order
Order filled.
2 contract here. And so the reason why I'm buying right now is I will explain my strategy a little later. But a lot of people say, wait a minute, the market is dropping really fast right here. I mean, look at all these huge, red candle and stuff. Why would you want to buy? It's bearish. It's dropping. It's gonna tank. Yes, it's tanking, but this is one of my, strategy that I use to scalp trade. Sometimes I might hold it for, um, you know, 5 minutes, 10 minutes, which I consider that day trading now. My scalp trade, usually I go in on a 5 candle, probably just 1 or 2 candle, I'm out. On a day trade, I might go a good 30 minutes or so, depends on how price action is at the moment. But my strategy is that the 20 moving average is king. Right, that's just my belief. I don't know about other traders, scalpers or day traders and things like that. I went to a lot of trade schools, conferences, seminars, and things like that, but I've not heard anybody with the belief that the 20 moving average is king compared to all other moving averages and stuff. I've been trading for many years, and I just come to the conclusion that the 20 moving average is king. Right. So as you can see, when the candles break above that 20 moving average, which is the green, when it gets very far from that 20, it's gonna come back to it. It's gonna snap back to that 20. And many times the 20 will provide support, other times it will not. And in this situation, it did not provide support, so it broke right through the 20 moving average all the way down. But on either side of that moving average, the 20 moving average, right? On either side, when the candle goes too far away from that 20, it's going to come back. And the same holds true when it goes too far from the 20 to the downside, it's going to come back close to that 20. So my strategy would be, when it gets too far, I will short on the upside, and then when it gets too far on the downside, then I will long back to that 20. And that's scalping that difference between the candle and the 20, the candle and the 20. So let's see if this will hold true on my 2 contract on the E-mini S&P 500. I have a ATM strategy in place, and so basically I have I think this is a 24 tick stop loss, and it has a stop strategy in place, and so it will automatically trail when it hit a certain profit target. And every time my profit target moves up, then it will also trail. And I think I had it set to 4 ticks, so every point profit it goes up, it will trail. And so as you can see here, we are already 4 points up. So for those that doesn't trade futures, 4 points, basically 1 point is $50. So right now at 5 point, we are at about if basically it's trailing and stuff. All right, so you could do the math. 1 point is $50. All right, but it is also, the price is way up here, as you can see. All right, and it's also trailing with this little 2 contract trailing stop loss. All right, so it's moving up. My trailing, it's auto trailing as the price keeps moving. Every point it goes up. Right now I could manually move my if I want to take some profit right here, I could move it up a little higher up there. It's just so that um, if it drops back, I will take my profit. So right now we are at about $600 in profit stuff. So what I would do is I probably, we're not going to be that greedy, so I'm going to put it right here. And so if it drops to that point, I'm out about $600, $700 in profit. So this candle is forming, so I think I'm probably going to get stop out because it's the closer you get to that 20, and also as you can see, the 8 moving average is also
Stop
coming
filled.
down. There it is. We got stopped out. And so usually I don't wait till it gets up there because it might not get that far because usually the 20 will provide resistance. All right. So on the upside, it might provide support, but on the downside, going back up, it might be resistance. All right. And so we talk about a $700 profit on this trade. Usually I could do a video like this, talk at the same time, and then trade and things like that because I try to automate my trade as much as possible. So I did another video a little earlier using hotkeys programmed to my Stream Deck and stuff. So I push a button and basically it just put in my order and all my ATM strategy, stop strategy, it's all in place program. On TD Ameritrade, that's usually I set OCO orders, one cancel other. And so I usually like to use a strategy. So once I get in, it's automated. I don't have to pay attention to it. I don't have to worry about it. Um, and a lot of time I will manually, just move things up and down. My profit, my stop loss, as you know, the charts start to print and I can kind of see where price is going. I usually pay attention to also the speed of the order execution coming into those candles, how fast they move up and down. Little candle at a time, or is it huge big candle up or down and stuff like that. And usually when you see a huge big red candle or green candle like this, it's usually institutional money or people who have a lot of shares. You and I can't make these huge big move, okay? I certainly can. My two contract doesn't even do anything on the chart. All right. And so when I see these huge candles, they are usually smart money manipulating, that particular candle right there and stuff. And so if you know which direction it's going, you can place your trade accordingly. And so basically, let me explain this again. I will long a position and I will try to find trades that meet my criteria, and that is when the 8 crossing the 20, the 20 crossing the 200, and all three moving average are tightly together at that point. Okay, so as you can see right here, the 8 is above the 20, the 20 is above the 200, they're pretty close together. As they expand out this way, shoot out like that, all right, then it gets kind of scary, all right? So if you're gonna trade somewhere out here where there's a huge gap between the 8 and the 20, and there's a huge gap between the 20 and the 200, be very careful because you will see this right there, boom, all the way down, all right? So when you are riding that 8 up, okay, and it gets to this point, I'm just kind of like, all right, it's a little far from my 20, should I get out? It's a little far away from my 20, should I get out? So as you can see, when it got far from that 20, it did a pull back all the way here before it made another leg up and made a higher high. All right, but when that candle break the 8, I'm out. That's it. I'm taking profit, and then I'm start looking for short position and stuff like that. And so I don't know if you see this, but this is a little black star right here. This is called my rock star indicator. All right, when it's black like this, there's a lot of momentum coming in, meaning that there's a lot of smart money shorting this, and that's why when you see this little star, boom, 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 all the way down, fast. You see these little candles up, up, a little candle up and up, and you see on this side, huge candle, huge candle, huge, 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 huge. All right, and that little star indicated that the the speed of the order flow coming in and the execution is not your retail trader, right? We can't do this. It's usually institutional traders, hedge fund. They're coming in big and stuff, shorting this thing to try to manipulate the price, bring it down, and then they will buy right back out too. And that's that's you and me between those candles getting wiped out, our stop loss being taken, and pretty much our money is gone, kind of a thing. So you have to kind of really understand what is going on your chart if you're trading and stuff, especially if you're scalping or day trading. And so my strategy is, there you go. Now it's far from that 20. I could actually take another trade here, right?
Order filled.
So I just did another order. Okay, I could get stop out, but that's fine. You're not gonna win every time. I mean, if I want to take more risk, I could bring my stop loss down to maybe 38.80. But I don't want to, I don't want to change, my strategy and things like that unless, something on the chart is telling me that I should. And so I'm putting in another true contract under the belief that my strategy is that the candle is gonna move back towards that 20. I could be wrong. I could get stopped out, but when I win more, and when I lose a trade, I lose a little less. So if I do 10 trade, if I lose 5, I win 5, I'm still making money. You understand what I'm saying, right? Because with my trailing stop loss, I get stopped out, I lose less, but then when I win more because it runs, it trails, and um, if you could manage your trade, 10 trade, 5 win and 5 loss, and then minimize your loss, there you go. My auto trade is kicking in again. And so as you can see, every time that cha-ching comes in, that tells me it's money. Right? I'm winning, and my trailing will be trailing. Every time that candle goes up, every point, it's gonna move my trailing loss up and things like that. So I don't have to pay attention. I can talk. I can just watch to see if I'm making money or I'm losing money, and my strategy will just kick me out of the trade. So as you can see, as the candles start to go back up towards that 20 moving average, my trailing is trailing that candle and stuff. And so I'm up 600 bucks. I'm gonna take it. So I'm gonna put my stop right pretty close to that ask and bid.
Stop filled.
There it is. I'm out. So I'm pretty much another 500 bucks up on this particular trade. And so I could sit all day and watch this chart for it to, I like it when it moves really fast like this. Scalper and day trader makes money based on volatility. I mean, the stock is very volatile. It moves up fast, it moves down fast. I love it. That's how I make money. And so right now, I wish that this green candle will just drop right back really fast down here. I'll put in another trade. Because why? Because my 20 is still up here. Okay, the candles are moving too fast. Okay, up and down. And so during this 5-minute candle, the moving average hasn't really moved, but the price is moving a lot inside that candle. And so it will take time for this moving average 20 to catch up to the candle if it keeps going down. Okay, so the dominant trend here is going down. You can see that. But I'm still trading because I have a strategy that I'm using to trade the chart. Where's my arrow? There you go. As you can see, that's a downtrend, right? But I'm still trading. I'm still making money. So eventually, the candle will catch up, and to the moving averages, or the moving average eventually will follow the candle, right? And so now, unless this candle drops way down again really fast, I'm not getting in. I'm sitting because right now it's getting closer to the 20. And so if it breaks above that 20 and another candle forms and it found support on the 20, then I might go long. But right, and put in another position and things like that. So if you um, back test this a little bit, you can see that, here is the 8, the 20. All right, so the 8 is crossing the 20. The candle just broke above it, but the 8 and the 20 is way under the 200. All right, so usually this is a good setup too. There it is. But I usually don't like trading this and stuff. Okay, if you want to be very conservative and minimize your loss and maximize the chances of that when you get into a trade you're gonna win, I don't trade unless that 20 is under here. All right, it will be a perfect setup is that 200 is under my 8 and my 20. But as you can see, you can still make money on this run here. All right, so basically I would prefer this scenario where the candles are above the 8 above that 200, the 20 is above the 200 moving average and stuff. And so you can see that anytime that candles right here the bottom, it's far from that 20, it's gonna snap right back to that 20. That 20 is this green line right here, right? So when it's far from that 20, it's gonna snap back to the 20. When it goes up a little too far from that 20, it's gonna pull back to that 20, which is that green line. If we go back and back test this, you will see that my strategy here is that the 20 moving average is king. Right, so here it is. It dropped all the way down here far from that 20. Guess what? It's snapped right back to that 20. Right? It goes a little far from that 20, it snapped right back to that 20. Same thing here, far from the 20 back to the 20, far from the 20 back to the 20, all the way down far from that 20. This is where if you're thinking about entering a trade, this is where you get in and ride it back to the 20. And before it gets to the 20, you're out, jump out. All right, same thing. All right, here it is, a perfect setup. I like this. All right, the 8 moving average is the blue line crossing the 20, and the 20 is, and the 8 is above the 200, and candle just broke above my moving averages. All right, so my key moving averages, when the candle broke above it, that's when I go long. I write it, the 8, which is the blue line, and as soon as the candle crosses my 8, I write the 8, I get out. Guess why? Because it's a little far from the 20. Not so bad, right here it's a little far from the 20. I probably would jump out already at this point. All right, but it did make a little more movement to the upside before it actually snapped back to that 20. And you could get back in. I mean, once it touched the 20 and then it break above again, the candle break above, there it is, jump back in. And then when it's far from that 20, right here's the 20, when it's far from the 20, jump out. It's almost like, a story that you could see being told over and over and over and over again. And so as a trader, why would you be trading against this? I mean, if you are not doing exactly what I just been talking about in the past 5 minutes, I mean, you are trading against the trend. You are trading against the momentum. You're not making money. You're gonna lose. All right. Let's go back a little more. All right. Same thing. As soon as the 8, the 20 crosses the 200 and the candle is above it, I go in long. All right, so boom, it writes up. When it breaks the 8, I'm get out. Okay, and things like that. And here's a choppy going consolidated, an area of accumulation distribution right here. Right, and then it decided to go down. Boom, 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 and then probably there it is. I mean, it's kind of far from that 20. If you want to scalp trade this, you jump in right here, ride it back to the 20. Simple strategy. I mean, you could go to trade school and pay $2,000 to $5,000, and they won't even teach you this and stuff because I've been through it. They teach you all of the indicators, how to read the indicators, what it is, all the formulas within those indicators, like the stochastic, the MACD, the CCI, the RSI, the MO, the OU, um, you know, the EMA, the MA, everything. I mean, you learn all of these things, but how do you use it? I mean, how do you put it together? I mean, there's so many. I mean, if you put all that junk, I mean, your chart is, you probably won't, it will look like my 8-year-old, drawing that you can't tell what the heck is in there and stuff. It'll be too messy. All right, so we're looking at the 5-minute chart here. These, if I were to held my trade a little earlier, and I would have made some more money. See, and when it touches that 20 moving average, guess what? It's afraid of it. Resistance. Okay. So as soon as that candle hit that 20 resistance, it drops right back, and next candle started going down. That's as if there's something here that it wouldn't want to go past that, and that is king, the 20 moving average right there. Right? Of course, I use that in conjunction with a whole bunch of other things in my trade, but this is one of the very simple strategy that I've mentioned that in a couple of Zoom talk and on my posting on my Telegram Hmong investor and traders chat group. And a lot of people is kind of like, well, can you really explain more in detail what it is you're talking about, your 8, your 20, your 200, about the candles being, above the 20, and about the moving averages are very closely at the beginning together, and then when they expand out and things like that. And so I thought I'll just do this very quick video, just kind of like hopefully explain the strategy that I use, and maybe you could look into it and adapt and make it your own with other indicators and other strategies and things like that. I use a lot of algorithm, pay script, even the auto trading bots that I've used before. Can't seem to make them work, the way I wanted it to make money. And the only one that I've been using quite a bit is my Rockstar indicator and stuff. But that thing cost me, I think, $700 for the Rockstar indicator. But I think it's worth it. And so I'm using it. Like I said, that little black star here is the Rockstar indicator. It really depends on the chart too and stuff like that. Things will change. So let's go to a 2-minute chart. See what kind of signal the Rockstar is printing on this here. Alright, it's still calculating. Okay, there it is. Alright, so you can see some Rockstar. Here's a black one right here, and then there's the yellow one. Okay, that the strong signal right there. Right, so when the Rockstar signal is above the candle, it signifies a imminent downtrend. Boom. And then when it signifies where the Rockstar indicator is under the candle, it signifies a strong move up. Boom, kind of a thing. All right, and you're saying, how come there isn't a Rockstar up here? How come there isn't a Rockstar down here? Right? It has certain parameters that certain formulas that are being taken into consideration. That's why, even though here you see a whole bunch of red candles, you don't see that Rockstar being there, and it's going up, but you don't see a Rockstar there. All right, so that Rockstar indicator has certain formulas that it's using, right? And I think how I understood it is that it's using a speed tick where it measures the order flow execution that's coming into those candles. And it's trying to measure whether the amount of money that's flowing in, how quickly it got executed, whether that's you and I, retailer traders, putting in those orders using our phone and our laptop and our computer, versus an institutional investor, a hedge fund where they put the order in like fast and quick, right? Supercomputer. That's what it's measuring. And then it's also measuring a whole bunch of other things. It is measuring. It uses the uh, it uses the MACD, the RSI, the CCI, the MO, momentum oscillator, the UO, stochastic, and a bunch of other things in there to calculate when there is a strong pullback and reversal of trend, right? And so it's a combination of some really neat things working together, and things like that. So I like that indicator. I paid, I think, like $700 for it. It's worth it, um, because I don't want to put, 10, 15 indicators on my chart and reading each, individually to try to figure it out, you know, what the candle is doing. That's a headache, and it's too slow. All right. So the algorithm put everything together, including some um, proprietary formulas in there to help me with my trade, just giving a very simple signal as yes or no. It's just all of these things are happening or not, kind of a thing. That's all I want to know. And as a scalper and day trader, I want to quickly just press that button and execute my trade right away, right? That's why I have hotkeys and everything else. One of my trade instructor 5 years back is telling me that professional traders don't use the mouse to execute their trade, right? Meaning that if you're using a mouse to trade, you're just a retail trader, right? A newbie or somebody who's using their computer or a laptop to put in trades and things like that. And that's why I try to upgrade and learn more and use hotkeys and things like that. So that's why I got this little stream deck that I program everything in there. So all my strategies are programmed in there. So when I press a button, it buys and then it also execute all my OCO orders, all with the click of a button. And all I do is once I press a button, I can talk like right now. I'm talking to you as my viewer right now, and just watch my trade to see whether I'm making money, I'm losing money, and eventually when certain parameters are hit, conditions are met, it gets me out, take profit or cut my loss, right? So if you have any questions, feel free to direct message me, or somehow look me up on Facebook or comment below, and I could try to answer some of your questions. And if you have any good strategy that you think it's just like great, if you don't mind sharing, just contact me or put the comment down here and say, hey, this is what I'm using, explain a little bit and things like that. Because the whole purpose of making these videos and the purpose of being in these chat group or traders or investors group is to learn from one another. So this is I say it's going to be 5 minutes, but I lied. I just kind of like rambling on, and it's now 30 minutes, so I'm sorry about that. But hopefully if you listened all the way till this point, I'm pretty sure then you are learning, and this video is giving you good informations. All right, so peace, and good luck with trading.